All right, what's going on, guys? Today I'm doing a stream, and in this stream, we're going to mainly talk about swing trading basics, what you should look for in a stock if you're trying to swing trade, what swing trading is, and more like long term trading too. We'll get into a little bit of it maybe, but really, I just want to help y'all learn what swing trading can do. I know, one second. I know, day trading cannot doesn't have to be for everyone. One second, I'm trying to connect my AirPods in here. Um, yeah, I know. Swing or day trading can't is not applicable to everyone, and other people might want to take a more of a longer approach, sort of wait it out. Either they have like they suspect that a stock will go higher eventually. It doesn't have to go higher that day, or they have news behind the stock. So we'll take a quick look into that today. I'm not really going to do a recap of today. I didn't trade for too long. I've been trading the past 2 days, but I've been really rushed. Wednesday morning, I had a doctor's appointment, only traded pre market there. And this morning, I had a test early in or around like 11:30, and I had to go to the print shop right before that. So, traded for like a few minutes into the bell today, but that's pretty much it. It's not much overall. Um, but yeah, that's besides the point. Let's take a look into swing trading. Um, what the strategies I'll be talking about mainly apply to like more larger cap stocks. I wouldn't not trade or swing trade any penny stocks or anything like that. So it would take into account for larger stocks like Facebook, Apple, Roku, Zoom, Beyond Meat, Boeing, JP Morgan, Nvidia, all of these, and AMD. I guess one of my favorites, as Leaf would say. But all of these stocks have a little bit in common of following a pattern, and these patterns they really can thrive in a bullish market, and in a bearish market they can all do the same thing. So if you're invested in Facebook, Microsoft, all these Apple and all at once, and the market decides to crash, guess what? The biggest stocks that are going to get impacted is the blue chips that you're invested in, and one again, it's different circumstances. Like Zoom, for example, that's the first stock we're going to take a look at today. Zoom, for example, uh, as the market crashed, Zoom stock went higher, obviously because people started using more um, video conferencing for work, for school, all that stuff. So let's take a quick look at Zoom. Um, Obviously, stuff I'm going to be showing is on this program called Thinkorswim. You do not have to use Thinkorswim. You can easily, not easily, but like very mindfully understand patterns of just watching the price action over a few days, a few weeks, a few months, see what the highs are for a stock, where it's been. It's obviously better to look at a chart and see exactly where the price is going. So, first of all, when I do take my swing trades, or excuse me, if I do plan on getting into a swing trade, I look at the 180-day 4-hour chart. And the reason I do this is it gives us a broader view of direction. As we can see, po, pre Corona, right? Zoom was trading around the SMA, getting rejected, came back up, fell back down, came back up, came to the SMA, got rejected, came back to the SMA, and then eventually, as 2019 came around, Corona started taking over, or not exactly when Corona started taking over. Let's see, what is this? Yeah, so this is 2019. This is where the Corona outbreak started, going into 2020, right? It popped up a little bit, pulled back to the SMA, and then after that, it's been taking off ever since. Right here, we recently saw a pullback to the SMA and then a continuation higher. So, what is the SMA? SMA is a simple moving average. This basically is a line that indicates the average of stocks or the average price of a stock with it being going up, down, with these big moves and accounted for, right? So let me take a step back here. So what type of stocks would you want to swing trade, right? In this current market that we're in with volatility and uncertainty, I personally wouldn't be the most confident going into a swing trade um, at this very time, and that's just me because I feel like I personally don't like to take on risk overnight or over a weekend, especially because the market situation we're in right now. If you told me pre-corona to go into a stock for a day or 2 3 days, I'd be okay with that. More because we're in a bullish market. There wasn't many factors throwing it around that would cause a bearish move. So what do we look at when we try to swing trade, right? So swing trading, first of all, is not long-term investing or it's not day trading. It's that right fine line middle of day trading and long-term investing. So many people will swing trade, and that can be defined as keeping a stock overnight, or that can be defined as keeping a stock over a few days, few weeks, and a few months. I think the most people I've seen people swing trade is maybe 2 or 3 months, which is totally fine, right? You it's still considered a swing trade, I guess, if you want to trade for 2 or 3 months. And so when we're swing trading, right, we want to look at market conditions, how the stock is doing, what type of news is coming out for the stock, and what really would drive the price for the stock higher or lower in that case, to see what type of events and news um, will affect, right? So right here, when you're swing trading, every trade, well, not every stock, I guess, when it's planning a reversal, you have your direction of where the stock wants to go. So let's just take this little move into example, right? So you have your direction where you want to go. The stock is going to consolidate for a little bit, which means it's just going to stay within a range of values. And so in this case, let's get in a little bit closer, tighter here. I would say around, um, if I was charting this out, I would say around 125. Oh, yeah, it's at 125 to the lowest. Oh, that's not my drawing tool I want. I don't want this price level to about, what is this, 108, 110 area. All right, so we're just seeing like over the couple of few days right here, it's just trading between these range of values. Obviously, you can go into the stock right here and sell it at the end of the day up here, right? That's whatever you want to do with that. But overall, like over the few days, like what is it, 4 or 5 days right here, we're seeing that the stock is just trading between 110, high of, what is this, 126, 110. All right, it tested the lows back here again. It went up, and then came back down here, and then it sort of didn't go back and test the lows. It showed us more of a reversal pattern, which it oh my bad, which it started making a higher high on the candles. So we're saying that the price, it was moving, it was higher than the previous candles. So um, if we're taking into account this candle, it's higher, or this day, it's more bullish than the previous day. The next day, it's more bullish than the previous day. So that's what we're saying when we're making higher highs, right? You'll sort of see it if you're following a trend line like that, right? You're sort of bouncing on this line, but then you start catching this little angle of going up, which is called a reversal. So you have your move on the way down, right? These have like finite words for them. Let me quickly search this up. They're called the 3 stages of a reversal, and it's a, wow, I can't seem to find it right now. Um, Okay, right here, yeah. So so this is saying we're saying the stock Zoom was getting rejected by this level. It started to consolidate right here. And then once we can confirm the uptrend that it broke these high levels that it just kept getting resisted off of, we can say that there's a confirmation of an uptrend. And many times you will get faked out, right? You will get faked out of uptrend and it might just start falling down. That's when you start controlling your risk and managing your risk. But it's your part to make sure you're getting into a good opportunity in the first place. Um, so right here, Zoom started to get rejected, became in a consolidation phase, then confirmed the uptrend. Now, what we have to keep in mind is it's continuing the uptrend. The high is at 175, right? Now, it can either go up to 175 and have a double top, or it can break through that 175 level and continue its move higher. We don't know that yet, right? So we're just hoping um, so I would think, right, personally, if you're not in this move already, if you haven't been in this move already for Zoom, it's too late to get in now. Because if you were to get in right now, what are you um you're risking a lot more downside, which is about 23% right here, for what? Maybe a first rejection at 75 for 4%. It's not worth the risk and return um, for what you're trying to trade right there. So there's a lot more downside to this than upside as of right now. I would think. Obviously, it can go up to 190, 200, right? Whatever. But it's my part to find the lowest probability of risk. So let's just say right here, right? I know Samir. I know. A few weeks ago, I think Samir reached out and he wanted to know a little bit more about swing trading. And at that very time, my eyes went right to Zoom. And unfortunately, I didn't have enough time to explain to Samir what it was, but we're getting around to it now, right? So what's swing trading right here, right? So we had right out the as the outbreak was happening, we had a high of 175, pulled back, tried to move back up, make it to move back up, but there was more of a um, lower RSI, right? Obviously, the price is a little bit lower. The volume was sort of dying out right here. There's a lot more red candles, more selling pressure going on here. We got a lot more selling pressure on this specific day. What is this right here? We got a lot of about 16 million, almost 17 million uh, of selling pressure just that on that candle, right? And then once we get to this consolidation phase, we see a mix of green candles, red candles, green, red, right? Green, 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 whatever, right? So we have to see basically where we can see there's a support. A support on this stock, if I was trying to come out of this, right, would either be my SMA line, which it acted on, right? And the SMA line, a stock will rarely ever hit perfectly on the SMA line and then perfectly do a consolidation, perfectly move up. Yeah, you have to give it space to go down and up. SMA line is an indicator. It's not an indicator to tell you exactly buy at this price, right? Easily, Zoom could come out with bad news right here, and the SMA is not respected, and the stock can go down, right? It just depends. So if I was charting this, let's say I'm watching it go into this rejection, right? We're in this rejection. My personal two spots where I'd look to get in is either at the support line of 100 or at this SMA bounce. And what it's done is it's used the SMA as an area to bounce up. So you really want to start focusing on times like these where a stock has been uptrending, right? SMA has been acting as a line of support. It didn't exactly hit the SMA here, right? But still, it was sort of like this. It didn't break below the SMA, right? You just have to sort of see that it was consolidating here, right, between this and this. The stock is consolidating, and then once it broke through, it had confirmation of its move up. So when we started seeing that move up, everything that pushes up really fast, right, just like Zoom did, has a opposite reaction going back down. Usually, always will happen, right? So If I was seeing that, right, I would look for this support level, this previous price level, if not the SMA. SMA line supported, and it continued its bull move up. We can see this with any other stock. Um, let's take a look at Apple. Okay, see, as of right now, since we're in a volatile market after Corona, it's harder for these stocks to respect an SMA line. I'm not saying it's impossible, right? It clearly did right here, right? It clearly did. Stock pushed, okay, came down, pushed up, sort of got rejected by the SMA. You know, I told you you have to leave a little bit of room on the SMA, up and down. Just keep an eye on it. Got rejected, pushed down, make lowers, lower lows, right, all the way down, and then it started pushing back up. Right here, it had a very small consolidation phase, very, not even much of a consolidation where you could have been able to tell that it will push back up. But we know that once it fell really hard, it would probably make a move back up to this previous consolidation area where it broke out of a, let's say, um, we can call this a channel about right here, and add drawing about right here. So we can say that this was, Apple has been trading in a channel, right? And it broke below, but it was soon to recover back and fall back in the channel. As soon as it broke the channel that we are in, because there's like, you have to basically, when you're charting, you have to get the candles and sort of match them up at an even range and see what you can do, right? If you're buying at the bottom of this channel around this, you have so much space to push up. But if you break the channel and go lower, that's when your stop loss comes into play. That's when your risk management comes into play. You want to only give up about maybe 2%, right? 3% at most if you're getting in at the dip to make, let's just say it reaches to the top of the channel to make 10%, right? So we're trying to find patterns like these over and over in the stock market and in specific stocks. Patterns tend to repeat themselves. They do not have to always respect a certain pattern, right? And in this case, we see Apple has pushed up. It broke the SMA line, right? So you see there's a little bit of consolidation here of it's trying to make its mind if it needs to break the SMA or get rejected and fall back down. So it had a very minuscule sort of consolidation phase here. Broke through, um, made this move up above the SMA and then pulled back to the SMA and then pushed back up just for now, right? As we're looking at this right now, it definitely looks like after hours it's thinking about coming back down, but we don't know what's going to happen pre-market tomorrow. So that's how I sort of look at my stocks if I need a swing trade or anything. Um, Examples I like is this is just my little watch list on the left of my screen. Examples I like to see is before uh, before Corona, because it gives you more of a clear example and sort of view of how to trade a swing trade a stock given stable market conditions. And it's interesting watching because now these indicators can mean so much. These stock prices can fluctuate just based on quick news like that of the market, right? So it just depends pretty much of what would like to happen. Okay, so let's take a look at a Roku pre pre coronavirus, right? So right here we see Roku go into a consolidation phase, right? It pushes up and then it hits this level right here and then gets rejected. I want y'all to take a second and see why you think it would hit this level and get rejected here. Why not just continue to move up? Just take a quick second and look at the screen, see what you see, and I'll explain what I see. So right now, the reason for my answer of rejection right here is because look, you're coming up to a previous level of consolidation. Where do you see this level? It's right here. It's right here. Last time it made a big move down, consolidated here, made a move down. Stocks can continue to do that. They can make a rejection move, consolidate, and then reject again. They don't have to always curl back up, right? They don't have to. And at this time, there's probably some really terrible news that came out that has made the stock dive that much, right? So at this time, we see a consolidation. So we know when we're charting out, when we're making our entry points where your target wants to be, where you want to get out of a stock, you want to keep all these levels in mind. See what previously it has done, where it got rejected last, and then that's where you can put your target to get out of the stock. Never, not never, but don't always expect your target of the target of your price. So let's say, right? Let's say I'm watching this Roku right here. I'm planning on getting a little bit of my position in on the consolidation. Never go 100% into your position on consolidation because moves like this can happen. You get rejected, you consolidate, you're like, oh, okay, this stock is stabling out, right? The stock is stabling out. No, it can easily get rejected and continue its move down. So you don't want your 100% position in right now. You want maybe around 10%, 25%. Personally, I would put 25% in right here to uh, see where the stock goes, right? So now it's starting to make its move up. As it's making its move up, I'm adding into my position. I'm adding more money into my position. Sure, my average price is getting higher, but I know now. I have confirmation that this stock is gonna push higher, right? I don't live under the thought of wow, well I'm putting money in this stock. You think it'll go up? No, I know at this point that we have confirmed a move up, so we will push up, right? So if as I'm pushing up, let's say my average from me getting in at 130 becomes like 135, 140. And sometimes these moves will happen after hours, right? You have a little bit of a move. That's when you play the market in the morning and then sort of make your decision based on that. Let me try to go back and find this move. So yeah, um, previous rejection right here, right? We know that it got rejected around 150. You could call it 150 break even. You have to have these levels 150, 140, 160, 170. Any good looking crisp number you want to keep in mind because the market always has these psychological numbers that they also trade based off of, right? It doesn't have to. There's a car drifting outside. You don't always have to go against, let's say, like the previous high of this was 152.68, right? Right? You don't always have to say, oh, this will definitely push up to 152.68. No, it can easily just push up to what was this? 150, 151, right? At the max. You have to keep look at this. Look at the high on this candle, the open on this candle, and the low on this candle. All in one section. Um, it kept that. But that is very early pre-market, right? So not a lot of people trading it. But you just have to keep in mind that it tends to get rejected here, right? It tends to get rejected. So you just have to see that from previous levels what you can make do of it. And this will take a lot and a lot of practice, right? You can always paper trade these, you can always simulate trade these and see what if your prediction comes out right. Again, we're in a very volatile and uncertain market. It is harder to predict these moves and play these moves daily or weekly and hope for the best outcome when you're not even sure if the economy is going to open back up, if there's a second wave of coronavirus, how this coronavirus is going to affect the economy opening back up, all these uncertain news. So you want to keep it in mind. What are you doing to best practice your risk management and your strategy? One thing you need to keep in mind is if your trade doesn't go along with your plan, so for example, let's go back to TOS, right? Let's say, um, sorry, trying to look for that move again. It was right here, right? So let's say I got in my consolidation here, right? And my move is not going to my plan, right? And I know that the bottom of this consolidation phase, if it breaks the channel downwards, I don't want to be in that because the stock market sees it. Oh, it broke the channel downwards. We're going to push the stock lower. There's going to be more selling pressure. which is going to be called, it's getting rejected by the SMA line, right? It'll get rejected by the SMA line and then push downwards, which it sort of did here, right? We have a little bit of a tiny bit of consolidation and then a push down, rejection, push back up. I don't want to get back in the stock and get rejected by the SMA and go down and hold on to it. Eventually, the stock will go up, right? We all go through that phase of let's hold on to it, be bag holders, right? And the stock will eventually go up. But the thing is, if I were to cut out my having a loss in the market is inevitable, right? You will lose money. You will have a red day. So you just have to take those losses sometimes. So let's say I got in at 130, right? And I'm stopping out 3% down on my position almost, right? To negative 2.84, almost 3% down. That's fine. I'm willing to risk that 3% of my money to go and make this 16%. I'm not saying you'll always get the move to the tippy top, right? You won't, right? Always get the move for the tippy top. But the thing is, you have to risk, right? Manage. If you're going 3% down, you needed to make your ratio that is going 6% up. Have like a 2-to-1 ratio, right? You don't want to go if I'm risking 3% downwards, and I don't want just a 3% up, which is great if you get a 3% up, but you wanna set your risk to ratio, risk management very strong getting into trading. You do not want to hold the stock and pray and think that, oh, the stock will eventually go up. More than likely eventually it will, but think about it like this: your money is stuck there. Um, you cannot trade with that money until that stock goes back up and you get a winner, right? Um, it takes time for these stocks. It takes time. So it's best if you're swing trading to understand the fundamentals, the basics, and charting is really important. I think for swing trading, learn your chart, learn your patterns. What with the most basic stuff you can do, right? Most basic stuff you can do is go on to Thinkorswim, right? Or go on to trading platforms, whatever you use, and just like draw lines. Honestly, just draw lines, right? So we have a rejection level there. We have a rejection level here. Um, we're seeing that Roku traded in this channel right here, right? And you just have to sort of connect the trows. Trows are like um, the candlesticks, the top of the candlesticks, the bottom of the candlesticks. Just connect them and see, practice it out. Look at what you think is gonna happen with Roku next, right? One of my stocks that I've watched a lot before I like I charted a lot of it, and I was really interested in this pattern and this stock, but I didn't play it. I missed out. Whatever. I like this pattern right here of Codex. I got the move from the very top, charted it down to right here. All right, let's almost connecting these, right, and then connecting. What it freeze? Okay, connecting those. So what I was expecting is Codex is a stock, CODX. It's a biological or biopharmaceutical or something like that stock, which won't have too much movement without news, which is fine, right? So I was expecting the stock. This big move happened during coronavirus because this company creates masks and all this fun stuff, hazmat suits. I think I don't know, but whatever. All these big moves happened to the stock, right? So I was expecting once it came into this pennant or triangle formation, I was expecting um, it to break out right here, just on technical analysis. Um, maybe basically, maybe the company puts out news to push their stock up or anything of that sort. I was basically expecting something right here to pop. It didn't happen right away. It didn't, right? So you see a lot of consolidation, breaks down, but I had this on my watch, right? It breaks down, broke below the SMA here, but it really still hugged the SMA, right? And then this day, I think they released news. I'm pretty sure they should have released news. Then you see this $1 million, 1 million share pump after market, and then it came back down, pulled back down, right? Held this SMA, hugging it a little bit, right? It's not 100% ever. And then you see this move up, and this move up was around 65%. Obviously, I wasn't going to capture the whole move, but it would have been nice to keep a closer eye on the stock as I already charted it and I had an idea of what I felt like the stock was going to do. Um, yeah, again, just go back in Thinkorswim, go back in your charting programs, and just literally chart for fun, right? So see right here, um, Tesla, right before Corona, it had this little push. I think this is before Corona. I'm not even sure. No, actually, it's sort of after, right? You had this fall, and then it had a pump up, fall further, right? So whatever, you made this little top peak right here, which is called the resistance at that point. Fell down, consolidated, came up again, got rejected here, or in that general area, right? You gotta count that. Never your predictions, your price levels, your SMA indicators are never gonna be 100%. So, sorry, were y'all seeing? I don't even know if y'all were seeing Tesla. I'll just explain real quick. There's a top trough right here. There's a resistance right here. It came down, pulled back up, got rejected here. Now it's making its move lower. I don't know if it's making a cup and handle formation. It could be making a cup and handle. A cup and handle is literally a cup, and then it doesn't break the highs on the first time, but it pulls back a little bit, and then it'll go back and make its move higher, which it definitely can be, right? We don't know. And their earnings reports are coming up, so something to keep an eye on. You don't want to not know about earnings reports and trade during those times. So again, go back in TOS, chart out high levels, price levels, where you think you should get in. Ask your peers, ask your friends. Do you think based on the charts? Do you think based on the news? Do you think based on the economy, the market right now? You think this price is a good price to get in? And there's a lot of things you can do to sort of verify that. And a lot of times when you're trading these stocks, people have multiple sorts of opinions, right? You're never going to learn if based on someone's opinion. You need to make your own decisions in the end. You can always ask for help, always ask to see like someone's your back end, right? But it's if once you make your opinion and your decision, and you lose money or you make money, you will only learn from your own success and your own loss. That's the best way I can put it. Um, that's pretty much it. This video has become very lengthy, which I expected it to become once you start swing trading. It's more of a stable sort of ground. One thing I would expect, or one thing I would sort of recommend when swing trading, and the last thing quickly, I'll wrap it up. I'm sorry for taking so much of y'all's time. One thing I would recommend is when you're trading, right? When it's in the consolidation phase, you do not want to put 100% of your portfolio. You want to put a certain risk amount where you can handle, right? So personally, I would put 25%, not of my portfolio, but of my dedicated money that I want to put into that stock. So 25% I would put in that consolidation. When it's confirming, as it's confirming, I'll slowly add a little bit more, and then once it confirms the move and I know the stock is pushing higher, I'll put the rest of the 75% in, and slow intervals, reaching up to that 75%. Because think about it like this: if you put your whole, let's say for example, $5,000, right, into a consolidation phase, it gets rejected, breaks that consolidation into a channel downwards. That's $5,000 towards the downside. When if you put a certain percentage, right? If I put only like $2,000, that's only $2,000. If I put in the consolidation phase and it breaks to the downside, that's only $2,000 getting that risk of whatever percentage I have my stop loss at or my stop in mind at. So it's just a bunch of risk management, a lot of practice. So again, if y'all have any questions, let me know. I'll be more than happy to go over these videos over and over. Personally, myself, I haven't been rock on in the market recently, right? It's been a tough past week. Last week was really tough. The week before that was pretty tough for myself as well. So I'm just trying to. This week I've just had a goal of ending the day green. Whether it's $10, $30, $40, $50, $200, $300, whatever it is, I just want to end the day green. Um, it's fortunately, and thank God it's helping a lot. I've been really setting my risk and my stop losses in place hard, right? I haven't been emotionally thinking where I should hold on to it. If I really see rejection, I will sell out at rejection. If I really see the stock has no hope for going up, I'll sell out. And hopefully, I want to continue doing that. I like the strategy of playing hard stops, of pulling myself out when I don't see any confirmation. And I could have made to this morning. I could have made my bro. I could have made like the $2,000, $3,000 if I held my positions, but it's fine. It's okay, right? It's if you miss an opportunity, there's another 10,000 opportunities in the market. You just have to find it, see where you're comfortable, and then go from there. And that'll be all, guys. If y'all have any questions, let me know. I'm always happy to talk about this stuff, teach you as much as I know. I'm not no professional, and these are not any trading advice. You should invest in Tesla right now. You should invest in Roku right now. I'm simply explaining what I know, how I can help you, and any further questions. But thank you guys for joining. I will see y'all later. Stay green, bros.